big sector that was in focus all of this week. That's the metal index. It's been under pressure because of data coming out from China. And yesterday, we had an issue of our own with regard to the mining in Karnataka, where the proposal is that duties/tariffs are likely to move up, taxation as well as duties. To help us out with an analysis, we have Amit Dixit, analyst at ICICI Securities, joins us on the show. Hi, Amit. Over the last 10 years or so that we have been in touch, well, we've seen this numerous times, right? Some flip-flop from one government or the other. And ultimately, better sense does prevail. So give us a few details first. NMDC was a stock that got slammed back yesterday because they mined close to 30-35% of its total volumes from Karnataka. Now, given the proposal that they have to go ahead and increase duties/taxes, give us a few numbers. The current taxes they pay is what? Around 43%, which is expected to go up to 65% plus. If it moves up to that level, it'll make it unviable, right? They won't make any money at all.
Yeah, so it's a very precarious situation for NMDC and a lot of other miners in Karnataka. So the kind of royalty or the mining tax that we are talking about, first of all, they are citing the Supreme Court judgment on 25th of July. So just to give the broad numbers, the current royalty rate, if you look at it, it is 15.5%. Now, NMDC got its license renewed by paying 150x the premium. So essentially the dead rent for them was 22.5. So already they were paying somewhere around 37.5. Now the draft that is being circulated warrants an increase of another 1.5 times the royalty. So essentially you move up to roughly 60 to 62%, and then add on it the 10% of revenue that they have to pay anyways to the SPV. So the total taxation actually works out to 70%. Now a miner, let us say, even if you assume an IBM price of 4,000 rupees, the realization of 4,000, and 70% of it goes in taxes and duties. So you have 2,800 that goes away. And a prudent miner, the cost of mining would be anywhere between 600 to 800 rupees. So essentially you are looking at a single-digit EBITDA margin, which is nowhere in the world any mining company makes these kind of a margin. And in fact, for companies like NMDC and all who might have higher overheads, they might not make any money in Karnataka at all in the revised framework that is being discussed.
Okay, got it. Amit, just to clarify that number, it's moving up to 70%. From what level? 42, 43%?
The additional thing is 22.5. So if you include that 10% SPV also as a part of mining tax, then it moves to roughly 72%.
72% from what level?
No, 47.
47% to around 70%. That's what, the rough increases, and they may not make any money. So that's about the prospective basis. The fear is that there could be a retrospective tax as well that could be included by Karnataka government, which will be actually very, very negative for NMDC. Do you think they have a strong case though?
Well, the Supreme Court does, allow companies to levy the retrospective tax. But my understanding in this and my view is that, first of all, the state should have made a demand for that in the past. And if there is no demand, then it would be difficult to prove. But, things under MMRDA and the Supreme Court judgment is not very, very clear in this regard. So we still have to wait for the things to evolve. However, in case of retrospective, for example, certain states like Odisha, they have Odisha that was passed in the state assembly. So there the case is more watertight. But in case of Karnataka, where to my understanding there has been no demand in the past, they would have to prove it in the court, definitely. My view is that people might just go for litigation in case of retrospective application of this.
And just to clear the air, for JSW Steel, the maximum they pay is 100 rupees per ton, right? Because they have got it via the auction route.
Yes, so auction route, JSW actually has paid a very
high premium.
Very high premium, whatever they have paid. So the incremental impact is 100 rupees a ton.
Okay. Very quickly, Amit, we want to squeeze this in. 25% of safeguard duty is being proposed, and in all probability, it's being looked at. Is it enough? If they get the 25% safeguard duty, what do prices of steel move up by? Very quickly.
So 25% safeguard duty means if you look at let us say the international price is roughly $500. So you are getting essentially a protection of 25% over that. That is $100 roughly. Now steel prices won't move up to that limit definitely because nobody wants to create an inflationary situation in the country, and the demand also might suffer. However, having said that, if you are thinking that iron ore prices would be allowed to move up as a result of this particular proposed amendment, and steel prices would move up, ultimately, you are encouraging inflationary environment in steel in India, which is not good for infrastructure projects, not good for the growth prospects in general.
Amit, thank you very much for joining us early in the morning. It's 9:10.